call option that got traded right here, $200,000 call option as the trade came in there. Now, obviously, when that quote is asked for, this is a 5-second chart, right? So when the quote's asked for, remember, this has got to go away and get priced up. So it's not so much the response to the quote in terms of the perfect timing, it's what happened just prior to the quote, just prior to the execution of the trade, because a lot of people will make sure that they take the trade on and then give the quote. For example, if I'm given a buy order for $500 million of euros, I'm going to try and do the trade before I then give the quote for the trade, right? That's pretty obvious. That's what's going to happen in terms of the way that banks have always traded. So when I know that there's a very large quote just hit for $200,000 worth of call option premiums, if I look at the candle preceding that and it's a very large up candle, what do you think is going to happen as a day trader just there? What do you think is going to happen next on that stock? When you see the market maker's reaction to that quote, what do you think is going to happen to the stock at that point? Are you going to be a day trade scalper buy or a day trade scalper sell? Make your decision now on this stock, guys. Day trade scalper buy or a day trade scalper sell? Stuart's gone bidding for Tesla stock. So you're obviously going to be able to watch that, and what happens next is that Tesla comes back to retest that commercial level, another surge in volumes into that same price, so you've got plenty of time to now do the trade yourself, right? And obviously what happens is it comes back and retests, and you think, oh my God, I'm losing money. I'm down a couple of percent here. Well, not really a couple of percent, but I'm down money here. But obviously what happens is you didn't have to worry about it, because ultimately the Tesla trade off of that key level ends up going really quite nicely for you, doesn't it? So you can see this storyline, the build on this storyline, the $200,000 call option enabled you to then work against this price for the next 2, 3, 4 minutes as a scalp buyer, and you could have bought some $450, $452, $453 stock, which rallied up to $462 just by recognizing the stock, the level, the idea behind the level, and then the takeaway, because they came back in, by the way, just out of curiosity, they came back in just to complete the storyline, and they bought another $200,000 around about 7 minutes past. So just in here, they came back in at 37 minutes. They came back in here for another $200,000 worth of stock. Premiums, call premiums, not stock, call premiums. In other words, they were buying 30,000, 60,000 shares. So they're buying 60,000 shares at that stage. And obviously 60,000 shares at a price of $450, that's the equivalent of about a $27 million trade. $27 million. Now it's out to the 4th of December, so it's only got 2 weeks for expiry on this, guys. 2 weeks for expiry. So when you think about it, these strikes are $520 strikes, $520, $70 higher than the current price, and they've only got 2 weeks, unless they're obviously going to go in there and scalp those trades. And that's one of the things that you can obviously understand. The option writer, well, think about it, Dimitri. If somebody's buying a call option, the option writer's got a lot of exposure to the upside, right? So what would they need to do? They would need to buy the stock to hedge that call option, wouldn't they? Yeah? How would you hedge a call option? You'd buy the stock, wouldn't you? If I sell a call option to you, then I'm obviously short the stock, effectively, against your long position. So I've got to buy the stock, which is why when we see a big market reaction to those call options, we start to pay attention to the, well, outside of the fact that it was Tesla, we start paying attention to the fact that this could be an opportunity to start bidding against those call options for a scalp trade. I know it's not a great scalp trade, but it's all right, isn't it? There's nothing wrong with it as a scalp trade. And obviously the takeaway from that was pretty good. The price did eventually trade back into this same level, and you'd have been watching to see if any trade took place again at that price. But on this occasion, no trade did take place, and we got this commercial sell away from this at 14.59, isn't it? Quite exciting. Quite exciting. Now you might be saying, why was it quite exciting? Why was it quite exciting in this area here? Well, why do you think it would have been quite exciting in here? Why do you think it might have been quite exciting? Well, I'll tell you why it was quite exciting. Because there was a call option trade done and executed at that price for $500,000. What was the market maker's response to the call option trade that was executed there for $500,000? A call option. The market maker did not take the price up. In other words, it looks like that could have been an offsetting transaction in some way, shape, or form. It could have been an offsetting transaction in some way, shape, or form against that trade, right? They didn't hedge that position. So on that basis, when I look at that trade, I'm thinking, I'm not going to buy, because it's the same price, right? It's the same price as we had before on Tesla. It's exactly the same price. So when we see this as a $500,000 call option, and the total of these call options here was about $500,000, is that not giving you a bit of information? It gives you perhaps a little cheeky trade. So obviously what happens to the Tesla stock at that stage is the Tesla stock gets absolutely crushed. 450 down to 440 at that point. And that's the outcome, right? That's the outcome right there. And that's what you're kind of looking for. Now, you obviously are starting to watch this because you're going to start watching for perhaps for some Tesla buyers coming in at lower prices. There might be something in the Tesla call options that might just start showing back up again. Well, interestingly enough, there was another $500,000 call option on Tesla. Interesting. The only downside of that call option was it happened in here. The price, the underlying spot value that was then brought from that trade was a price of 448.57. 448.57, guys. Now, when I'm looking at that call option, of course, I can see that they've pulled the liquidity aggressively into that call option. So it looks as if they are actually hedging this one, right? This one looks like it is a hedge. It's just that there's absolutely no follow through to any of those trades. Because of where the price they've ended up quoting, there's no follow through. So there's not a big stock buy into that trade, is there? There's not a big stock buy behind that trade. So obviously if there's not a big stock buy behind this, I think this is going to be a top edge. I think on the face of it that this is going to be a short-term top edge, and it is a short-term top edge. But you can see when the price drops down, I'm going to be watching very carefully to see if somebody averages into that Tesla trade, because the initial response looked as if it was definitely bullish. Well, interestingly enough, $150,000 worth of Tesla calls started to get bought back in at 1021, 1521. So coming into this area here, $150,000 of Tesla calls starts getting traded again. And the market maker's response was very bullish off of that trade. You can see the trade came in here. The market maker's response was very aggressive. And you can see that somebody came back in here for another couple of $1 million worth of Tesla stock, and they pulled this time. So on the basis that they pulled this time, your job is to try and buy into this, because this looks like an averaged out trade. This looks like an accumulation trade on calls. Because of the first initial market maker reaction looks bullish, I'm aware of the possibility of maybe trying to buy back into these downticks because of the first nature of the bullish pop. It looked bullish, it just didn't have that follow through. So I think this is going to be an averaged in. So I'm going to watch for that averaging in process and then join in with the buying as you see it, obviously. And the price did relatively good. But obviously when we come back down into these low prints, you're going to be watching again for the same thing. You're going to start watching for the buyers showing up again. You can see there's a couple of fast money responses. There's a fast money response here at 1535. So what are you going to look for around about 1535? A big Tesla buy trade, wouldn't you? You'd look for a big Tesla call buy trade. There wasn't any, unfortunately, on this occasion. And that's just sometimes the way it goes. Sometimes you don't get the kind of setups that you're looking for. You don't get the narrative, the information that you're looking for. But you can see that there was certainly a very aggressive buy coming away from those average prices. They may have just done it in a stock pick. You can see there's a very aggressive commercial buy off of that price there. And as a result, you might have been looking at that saying, oh, you know what, I think they probably should be averaging back into this trade here. So you can obviously go into Tesla and start buying into that average process. You can see another break lower here. You'd have expected to see a big Tesla call, but there wasn't any. Perhaps the volatility was too high. And somebody came in and bought some Tesla stock at that point. And again, at exactly the same price here. Somebody's buying a lot of Tesla stock on these downticks, aren't they? Somebody's buying a lot of stock. They've just come back in again on these lower prices. Again, look at the size of that volume, guys. I'm watching to see if there's any options getting taken against that, but there isn't any. Somebody's buying a lot of Tesla stock in here. It's either that or somebody's distributing from those key prices there. You can see that there's a big withdrawal of liquidity against that candle. So perhaps somebody's distributing on these downticks. But why they would distribute at that price doesn't make an awful lot of sense. It makes more sense that they're buying on those downticks and they're causing the market to fall through those as a stock trade. So you can see that they are buyers of these high volume down candles. So somebody seems to be on a big accumulation of the stock anyway. And we can obviously watch that storyline unfold. It's always an interesting stock to watch. You can watch that storyline unfold over the next couple of days to see just exactly how successful this, what seems to be an accumulation trade, takes place, whether it becomes a very successful accumulation. But I didn't see any call options getting taken on the Tesla there. So that's disappointing. I would love to have seen a big call option trade there, but it may be a little bit too expensive. How did the buy on the euro do, guys? For that block shout, again. That was a pretty good block shout, guys. Come on. 1858s traded up 1874s. A block buy on the euro. It's not shabby, guys. 6 candles ago, you were trading 1885s on the gold. It's trading 1889s on the gold. So you could have used the same block alert on the dollar to get yourself some stops on the gold break lower. So that's giving you, like Paul says, $400 a profit. Nothing wrong with that, Paul. Nothing wrong with that, my friend. Shakes you like a box of chocolates.